At the end of this video, I will show you a simple gold trading strategy, but this only works in a trending market. Hello traders, Doc here. In this video, I will show you some trading opportunities from a previous month. August is usually very slow because it's summertime and markets are very hard to trade. There are not many opportunities, but I found some on a 1 hour time frame that I will show you today. First trade that I want to talk about is this British pound US dollar trade. Here we can see this consolidation area and price then continue to go up and form this major high. Then we can see this bearish move follow with this minor bullish pullback. Price then form new lower high and then we can see this massive bearish move. Immediately after this bearish move we can see a bullish pressure, and this is something that is not rare to see. I even shared this picture on my Instagram a few months ago and explained this V-shaped pattern where price forms massive bearish move immediately followed by a bullish move and formation of a new lower high, and then price continues to go down. And this is exactly what happened here. Price formed this bullish move and then formed this new lower high. You can even use the help of a volume profile indicator that will help you to find some important areas where price can react to. In this case here we can see that this is basically imbalance area, and here as you can see we have high volume profile showings. When sudden moves like this occur, price usually goes back to fulfill this imbalance area. That is exactly what happened here, and then price tested this high volume profile area here. As you can see, price formed this new resistance zone and then finally formed this massive bearish engulfing candlestick pattern. This is also area where we have high stochastic RSI showings, and as you can see after this massive bearish engulfing candlestick pattern, price went down. So in this case here, it was very good opportunity to enter after this candlestick here and put a stop loss above this resistance zone. You can aim for this previous major low, but when this V shape occurs, it usually breaks this previous low and continues to go down. So you can aim for even higher targets. But because this time we have stop loss around 30 pips, then we can easily aim for this major low, which will give us take profit around 80 pips. And that means that our risk reward is 2.6, which is great risk reward. And in this case, it would have been a good decision. Next, we can see this Euro British Pound example. Price here started to go down, and then here it broke this previous support zone, and after a breakout, price went up to retest this zone. Also, we can see these high showings of stochastic RSI indicator, and we can see this bearish candlestick formation followed with this bearish wick rejection. And here we have very simple trading opportunity where we can enter a sell trade and put our stop loss above this zone and aim for a good risk reward. But in this case, basically every level here is a good choice because price formed this massive bearish move. So let's say that we put stop loss above this previous zone, which is a 15 pips, and that we aimed for a 30 pips to take a trade with risk reward 1 to 2. And then price continued to go down and form this new lower low and new lower high. Basically we have these lower highs here that we can connect with a bearish trend line. And price confirmed this trend line after this third touch here. This is a first touch, this is a second touch, and this is a third touch. So now we have new lower high formation, we have this bearish trend line, and also we have high showings of our stochastic RSI. Price then formed this massive bearish candlestick here, and this candlestick represented a great place to enter again and take a new sell trade. This time we repeat the same process, we put a stop loss above this previous high and aim for a good risk reward. Again, this time we can aim for a risk reward 1 to 2, and as you can see, price went down to reach take profit. In this example here, we have two very simple sell trades where we simply follow the trend. We have a bearish pressure here, break and retest of previous support. We have confirmation and indicator sell signal. Price then from the new lower low, new lower high, new lower low, and then again new lower high. At this point, we can connect these lower highs with a bearish trend line and wait for a reaction. It occurred here with this massive bearish candlestick formation, so we repeat the process, put a stop loss above previous high and aim for a good risk reward. And also here we have indicator sell signal. As you can see, two very simple trades. Next we have Aussie dollar US dollar example. This is also one very simple trade. We can see this massive bearish move here and then price slow down here. We can see here that this minor bullish pressure occurred here and here again. But if you look closely, you can see that price basically retested this previous major low here. You don't want to enter a trade immediately after pullbacks like this occur. I wouldn't enter here because as you can see, we have indecision candlestick pattern here. We have this minor bullish candlestick, but if you look closely, you will see this huge wicks here and here. So basically this is indecision candlestick pattern because we have huge upper and down wicks. And also stochastic RSI indicator are showing us buy signal. So we don't really have too many reasons to enter here. But once price pulled back here again to confirm this previous zone and form this strong bearish wick rejection followed with this massive bearish candlestick here. That was a good place to enter, and especially because here we have sell signal from our indicator. So this is a much better place to enter because now we are sure that this zone is a significant zone. We have indicator sell signal. We have massive bearish wick rejection followed with a massive bearish candlestick formation. So now we can simply enter a sell trade and follow our trend. We can enter after this candlestick here, put a stop loss above this zone, and also aim for a good risk-reward ratio. In this example, 1 to 2 again. As you can see, this is another very simple trade where we simply decided to follow the trend. Here we have a downtrend, lower highs and lower lows, but then here, as you can see, price formed this massive bearish reaction. First we can see these very low moves and then two massive bullish wick rejections followed with these two massive bearish candlesticks. This is a reaction to the news, and this is something that you want to avoid to trade. When massive reaction to the news like this occur, you don't want to trade, you just want to avoid it and to wait for a price to slow down and also to wait for a pullback. We can see that pullback occurred here and price formed this new lower high. Then we can see a bearish continuation, a new lower low formation, and then price went up again to test this previous high. First, let me explain why you don't want to trade here. Pullback occurred here and price formed this new lower high. But how do we know that this is a new lower high? We don't know, and that's why we don't want to sell here, because this new lower high can occur maybe here or even maybe here. So how do we know that this is a right place? Well, we don't know, especially because we don't have a confirmation of our indicator. So in this case, we just let price to move and we wait for a much better opportunity. Also, we don't have anything here to look for, maybe some previous support, supply, demand zone, anything. We don't have anything here. So there is no reason for us to sell here. And then, as you can see, price went up again. And here, price tested this previous high. And now we can wait for some bearish pressure and then opportunity to trade. Also, this time we can see that our indicator is giving us a sell signal. So now we have a test of this previous lower high. And also we have a stochastic RSI sell signal. And this is a much better place here to look to sell than here. Price then formed this bearish candlestick followed with this massive bearish engulfing candlestick pattern. And this is very good opportunity to sell. Put a stop loss above these previous highs and aim for a good risk reward. In this case 1-2 or even higher, maybe 1-3. So here we have this massive reaction to the news. We have a pullback, but we wait here. Price then went down to form a new lower low and went up again to test this previous high, and our indicator also gave us a sell signal. Price formed a bearish reaction, and this is a place where we can enter. Put a stop loss above previous high and aim for a good risk reward. For gold, this August was very bearish. As you can see here, we have a downtrend with lower highs and lower lows. And now I will show you a very simple strategy, but note that this strategy works only in trending markets. Structures like this don't occur often, so we cannot use this strategy very often, but when they occur, they can be very profitable. So here we have this major high and then price went down to form a new lower low. Of course, pullback occurred, and then we can see that price formed this new lower high. But how do we know that this is a new lower high? Well, we use the help of our stochastic RSI indicator. As you can see, this time it provided us with a valid sell signal as price continued to go down. You can also look for additional reason, and this time we can see that price tested this previous level here and formed two strong bearish candlesticks here and here. So all this was indication that this is a new lower high and that we can look to sell. Price then continued to go down and then formed new lower high. This time we also have stochastic RSI above our 80 line. So that is indication that this is a new lower high and that we can look to sell. Then if you look closely, you will see that this V shape occurred here. Then price tested this previous low and also stochastic RSI around this 80 line, which can sometimes be a valid sell signal, and in this case it was, especially because we have this V-shape pattern. Price then continued to go down, but then we can see this massive bullish wick rejections and also massive bullish candlestick. This time we don't want to sell because this candlestick is very strong and also our stochastic RSI is below our 80 line. So we don't want to look to sell here because we don't have enough reasons to believe that this is a new lower high. In this case it was, and price continued to go down, and then we can see this pullback and again stochastic RSI sell signal. Also we have this massive bearish engulfing candlestick pattern, so this is a valid new lower high level and price continued to go down. Then again we can see that price formed a pullback, and at this point we can connect our lower highs with a bearish trend line. And also we can connect lower lows with another bearish trend line. So this time we have another bearish trendline touch, we have strong bearish candlestick, and also we have stochastic RSI sell signal. So this was another lower high and price continued to go down. Again, pullback, lower high, stochastic RSI sell signal, move down. But this time we can see that price failed to break this previous low. And also after some time it failed to break it again. So basically here price formed this support zone. And this is an indication that our downtrend is about to end. And now especially after this breakout here we can say that the downtrend is about to end and our strategy doesn't work anymore. So basically to simplify this, in a downtrend you could just look to sell when stochastic RSI is giving us a sell signal. Like it did here and then here again and then here again and again. As you can see, all these levels basically represented a new lower highs, except this one I explained why. This also works in an uptrend, but in an uptrend you want to buy when our stochastic RSI is below 20 line and when price forms a new high low like this here and here. So if you followed this simple strategy for gold last month, you would end up with a massive profits. So in this video I showed you some very simple examples and trading opportunities from a previous month, and I hope this knowledge here will help you with your future trades. Please like and subscribe so I can continue to make more videos like this. Thank you very much and see you in the next video. Bye bye.